Today on Leader Podcast, episode 22, I am joined by my friend and client, Drue DeAngelis. 38 years in orthopedics, he's the CEO whisperer and the mind behind the DeAngelis Group. MSK Innovations and also Orthopedics this week. He's a busy guy. We are unpacking what great Medtech CEOs do differently and when founders should hand the baton. Let's get into the episode. Welcome back to Leader Podcast, one of my favorite clients and friends, Drue DeAngelis. Welcome to episode 22 of Leader Podcast.
Thank you. It's good to be here, Stephanie.
You call me Steph. You can call me Steph.
I do.
Okay. So I had asked Drue to come back on the pod because there were a few things that we had been discussing through DMs and emails and text and all the fun stuff that we use to communicate. And I felt like instead of us just sharing this amongst ourselves, let's bring him back on the pod and let's talk through some of these things. Because I actually think a lot of what you're doing are valuable lessons to our audience, which is largely med tech and medical device, including orthopedics. I know I always drop the ball on that. But anyway, Drue, tell us, for those that didn't see you the first time you were on Leader, what's your background? Who are you? What's your origin story? And then we'll go from there.
Okay. Thank you. So I've been in the orthopedic industry for 37 years and actually coming up on 38 years. It's hard to imagine it's been that long. It sure goes fast, doesn't it?
It does.
But I started fresh out of college, 22 years old as a Zimmer rep and full line, sold the whole bag, total joints, powered surgical, wound drains, spinal rods, and traction, everything. I mean, the catalog was this thick, over 15,000 products, and I was thrown in the deep end. Never had any training. A guy drove me around Colorado, introduced me to my accounts, and that was pretty much my whole training.
Was that like a pager rep? Was that what we call the pager rep back in the day?
I was a full line sales rep.
Right. But meaning you were on a pager, you were on call, trauma constantly, all day long, 24/7, night and day, weekends, holidays, all of it.
That was me for 10 years. And
my goodness.
It was awesome. I mean, it was super fun, tons of gnarly stuff that you get to see when you're selling trauma. But after 10 years of doing that and having a reasonable career at it, Stryker recruited me to start a branch in Arizona. And that was when Stryker was just three divisions at the time. So I had their spine division, I had trauma, and I had their recon division. And so it was extraordinarily fun. Had just a wild kind of ride. We grew like crazy, and then we bought Halmedica. So Stryker was about a $400 million recon company and very small spine company at the time. And then they had like two products in trauma. And then all of a sudden they bought this $1.6 billion company that was a lot bigger. So 1 year, almost to the day of the close, they brought me in. My boss's boss brought me into his office, which was across the street from my office, oddly enough, and announced that they were going to take my direct branch and make it an agency like it was 14 years prior. And he was the agent principal. So they ended up, HR was there, which they do.
It's always comforting.
Yeah, right. It felt great. I walked out of there going, wow,
what are you doing here?
What just happened? But the good news was that it gave me a really nice severance and paid for my health care. I had 4 kids at the time. And here I was trying to figure out what's next. Next one is going to be for myself. I'm working for myself. I didn't know how, but I knew that I was going to work for myself in sort of master of my own domain. Mm-hmm. And so then it began the process of trying to figure out what to do. And I can remember sitting down with my son, who was maybe 12 or even younger at the time, trying to figure out what to do, and doing the Benjamin Franklin kind of pros and cons, and the what do I want, what am I good at. And the thing that he said to me was, "You're really good with people, Dad. You should do something that you get to work with people." And he was right. And so I knew that, and I'd loved the people that I worked with, and I always made it sort of my mission to treat people really well and to make sure that I help other people be successful. And so it really became sort of a quest to find that opportunity that was something that enabled me to do that. But I also love growing and building companies. So
Mm-hmm.
I found this to be a really good blend of the two. So then I ended up buying this franchise with the same company that the guy that recruited me was a part of.
Mm-hmm.
And
Is that Ortho Spine Search or
no,
different?
that was MRI,
Okay.
which stands for Management Recruiters International. So I plunked down a bunch of money to buy a franchise, and I built an office. I bought, leased an office with, hired a bunch of people, and really put my neck out there. And then I realized that I really, really hated what I was doing, because MRI was this contingency search machine, and I quickly learned that contingency search is super transactional. It's not relational. I'm not able to, based upon the structure of the way that I work with my clients, I'm not able to act in their best interests. I have to be very focused on what's going to get me paid, which really undermines the relationship with my client.
Right. That's
So
literally like the translation of headhunting, right? That's like the old use of that term, headhunting. You're
yeah, I
hunting
mean,
heads. It's very
I,
transactional.
I'm not really offended by that term. People
No?
call me a headhunter. I don't really look at it like it means anything other than it's a descriptor, and I think it's a fairly fun one to use. But I will say that there are many unintended consequences when you work on a contingency basis.
Right.
Because if I'm not aligned with my client, you didn't hire me and sign my agreement and pay an initial installment to get me focused on your search, then the reality is I don't know if I'm going to get paid. So now I have to stack multiple searches on top of each other. And I have to work on like 15 or 20 at a time
Mm-hmm.
to make sure that something lands. It's kind of like the
Yeah.
old spaghetti, throwing the spaghetti against the wall. And so what I started to learn was that you would start to see taking shortcuts, even sort of coaching candidates, giving them all the insight into what the hiring authority
Leading. Yeah.
wants. Oh, you're totally coaching them.
Yeah.
And
Which isn't
so,
organic for them.
no, it's phony. It's a total
Yeah.
put up.
Yeah.
And so I started to see, and when we worked together at Cardiodynamics, I started to see placing people who, right after I placed them, they ended up taking another job. Well, that's because they're active candidates.
Right.
And the reality is when they're active, they're dating multiple people, and they'll take the first deal to get them, solve their immediate need,
Need
which
to be
is getting a
employed.
paycheck.
Yeah.
And then as soon as that better opportunity comes, they bounce. And so that was when I started to realize that I really hated what I was doing. And so I almost cashed it in. I almost quit. And then I talked to this old guy who's a mentor who said to me, the problem isn't search. The problem is you.
Ooh,
And
that hurts.
he said, you are not a true partner with your client. And he said, unless you are aligned and your objective is exactly the same as theirs, which is to mitigate a bad hire, mitigate flaws, and essentially that means exposing flaws in candidates and being transparent in your process. If you cannot do that, you have no business to be in the business. So that was that was a rude awakening. And so I really took that to heart, started to really think about, was it worth staying in, or could I retool
Mhm.
and be this retained search person? And so I finally did it. Obviously, probably 3 years into it, I had to buy out my MRI contract because, stupid me, I signed a 20-year deal, so that cost a lot. And it just I went kind of solo, and I had a team, but really worked on aligning myself with my clients, understanding their needs, which I think when we're in orthopedics and spine, I understand them because I was there. I carried a bag. I led a team. So it wasn't a foreign concept. These aren't terms that, are just words, but these are things that I understand conceptually and practically. And so, started, at low level searches and kind of worked my way to where today I work at the C-suite and the VP level. And I work with the best, most innovative, truly innovative companies that are doing some really cool things. And so, the outcomes are great. They're not perfect because people are individuals, and you may think you understand everything about somebody, and you may think you understand their true motive, and we do our best to try to determine that. But ultimately, we try to mitigate the risks wherever we can. So now I've been doing that for, let's call it 22 years or so, and it's a lot of fun. It's hard. It's funny. One of the times when I was hiring somebody, I was trying to explain to him, as Tom Johaski, who was the guy that told me about it. He says, the hardest thing I've ever done. You have no idea. And I thought to myself, you have no idea who I am and how smart I am and how
Bless
good
your
I am.
heart.
Yeah,
Yes.
right. And then I realized when I got into it, it is the hardest thing I have ever done. And it is soul crushing. And to be able to have somebody come to the finish line and you've been spending months on a search only to have them accept a counteroffer, and your whole thing blows up on you, or, something like that. There's an infinite number of reasons deals can fall apart.
Right.
And there's only a few very select reasons that it can work.
Yeah.
And, a lot of times, you have clients that just have unrealistic expectations. They think that this unicorn of a person is what they need and what they're able to hire. In reality, they don't have the value proposition that justifies and draws that person.
Bringing that person in. And it's not just about the package that they're offering. It's the long game, right? For those really top tier executives, they're looking for.
It's everything. Yeah. If it's just about the money, then that's the wrong person, because anybody who's just driven by money is really not the right person for any company, in my view.
Well, let's talk about the reason why I wanted you to come back on the podcast. So for those that don't know Drue, Drue is a lovely person. If you don't know him, you should get to know him, because God broke the mold when he made Drue. Everything that Drue has expressed up to this point is all authentic. That is who he is, and he's a rare person. So anyway, with that all being said, what I had said to him the other day, because Drue is also a client of ours, I had said, you've got too many companies. I can't keep up with. What are you doing? And
my wife agrees with you 100%, by the way.
I'm sure. So we just had this, kind of generic conversation back and forth about that. And then the more I thought about it, I'm like, I actually think this would be a really good topic to unpack on Leader, because I don't know, I'm not going to try and psychoanalyze you of where that comes from and why you like to have your hand in a lot of pots. I do also, and it can actually sometimes get in my way, but I think the way you've rolled it out has been very productive. And I did want to just kind of talk about the different entities that you're involved in, but also the purpose of each and how that evolved. I know in our pre-call, you were kind of talking me through that, but tell me how that's been for you, having multiple entities under your umbrella, and what that was all about.
Well, so probably 8 years ago, I kind of went through an entrepreneurial conniption and started 3 different companies. 2 of them are still going and thriving, profitable. So I kind of got a bit of a bug on entrepreneurship, but it was too much for me. And I really want to make sure that I'm able to provide the quality of service and work to my clients at the DeAngelis Group doing search. But then when you and I saw each other, not this March, but in 2024
LSIs ago.
at LSI. And, I've been to the MNVC conference, and I've been sponsoring that for almost 20 years. And the guitars over my shoulder are kind of the sponsor gifts that they give. But I've been going to that investment conference for years, and everybody loves going, and they feel like this is so worth it. lots of investors, lots of meaningful conversations, lots of interactions with other CEOs and so forth. But LSI was different in that, number one, it was extremely expensive. Kudos to them.
Kudos to them.
There's
Yes.
value there. But there was this repeating story that I kept hearing from people, which, CEOs that are there to pitch, which is, this is costing me an arm and a leg. We're cash constrained. It's really not the time for me to be spending this much money to get here.
Yep.
And in the room when I'm pitching, there's hardly anybody in there.
I know.
And, handful of them are my competition. And the other handful are service providers that are trying to, get a few minutes with me after. But the quality or the quantity of investors was just very low. And so as I heard that, and I thought, well, that's a reasonable complaint. Now they all admitted that, okay, at least I walk away with a nice polished video, which you and I both have.
Yeah.
And so there's some, it's not without any value. Obviously, they also don't want to be conspicuously absent. They want to be there to, see people and so forth. But it just stood to reason that there was a way that I could help. And that was by creating MSK Innovations, which is a pitch platform where we have 3 companies, CEOs generally, that pitch to 3 panelists. And the panelists are world class. I mean, they're guys like David Dvorak, who's the CEO of Zimmer Biomet. We got guys like Gary Stevenson from All Point Capital, and Kevin Rocco who sold his company BioRes, and Nick Pachuta from Neovate. And I mean, just great panelists. And I thought we'd probably do it quarterly. So we put up a website, and all of a sudden we kept getting all these applications, and it was a lot. And so I was thinking, well, we can do this quarterly, and we can be, it wouldn't really help these people very much because they're going to have to wait till March.
By that time, they're either out of money or found someone else to fund them. Yes.
Exactly. So we decided to go monthly, and we started in May of last year, and we've just finished our first year, and we're going strong. We're booked out through September. But we don't, everyone's curious when they reach out to me to say, how do you participate? Do you get a finder's fee? Do you get this? And I just say, no, we have a nominal application fee, which covers the costs. And, we do it just because we want to help. We want to help companies through their toughest days, which is, right now the cost of capital is extremely high. It's very, very hard. The investors get, a lot of deal flow, and there's just not a lot of investments happening. So that was really the impetus behind it. And we'll continue to do it until demand, gives way.
So DeAngelis Search is the primary entity that you run. Then that's
how I make a living.
Yeah. Right. Then you have MSK. Is it MSK Innovations or MSK?
Yes.
Yes. And for those that don't know what MSK means, which would be Steph Pliha, mucoskeletal. Is that right?
Let me help you.
Musculoskeletal.
Yes.
That's what MSK stands for.
Yeah. Yeah. And it essentially means everything related to the musculoskeletal system. So that's, everything from regenerative medicine to spine, orthopedics, trauma, reconstruction, upper extremity, lower extremity, and all of the accoutrement that go with it, like software and different AI tools, and anything that would be useful to an orthopedic surgeon or physician or spine surgeon.
Got it. And honestly, in my 25 years of med device, that's the one area of the body that I never touched. I never touched bone. And even robotics wasn't in the bone zone
right.
until just recently, right?
Right.
So it just was never part of my portfolio of work. And so forgive my ignorance. I'm learning through you. You're teaching me on the MSK side. Okay. So we've got MSK, we've got DeAngelis Search, and then there's a third. Tell us about that.
So everybody in MSK knows Orthopedics This Week. It was started 20 years ago by Robin Young, who was an analyst on Wall Street. And Robin really took a liking to the orthopedic and spinal space and started a blog 20 years ago. And over the years, that has just grown to what is today, I believe, the premier news publication online. We've done print in the past. We did our last one probably in March of this year. It's just not. I mean, people is as neat as it sounds to have print. People just don't really care about it, and so. But they have when I stepped in, they had 5 writers, all original content, great articles, and just analysis on various things. And a lot of it, centers around how the companies are doing. And there's a power rankings that Robin has been doing for a long time, which analyzes all the publicly traded companies in MSK and gives his recommendation as an analyst would. And he reported to me that his power rankings have outperformed the S&P 500 by orders of magnitude, which is impressive. But so Robin reached out to me in June of last year.
Mm-hmm.
And long story short, he asked me to acquire the platform. And I was kind of stunned, to be perfectly frank. I just never would have imagined that he was ready to sort of pass the baton. But he had just, he really is passionate about writing. He's written a number of books about innovation in the industry and done tons of research on, the early days of development for all kinds of different implants that would really be intriguing for you, even just to know that the Kunstner nail, which is used to rod a femur, it was invented by a German doctor during World War II, and they were experimenting on our paratroopers that would break their legs. And so, but it's turned out to be standard of care, and
Right.
it's obviously iterated. But he goes back through the early days of Charnley and all the different, innovators, which is super interesting. So this is a lot of the content that you'll find on what I call OTW.
Mm-hmm.
And so, after some back and forth, and I would say a very meager attempt at due diligence, I ended up stepping in and acquiring the platform. And at the time, the website was 13 years old, which in website years, that's like 100.
That is like 100.
It
Yes,
was
both from the
really,
technology behind it that supports it and also the content and the approach to market for a
yeah,
website. But yes.
right. And honestly, the content was fantastic. And it still is. It's even better today. We've added additional writers, and it's really good content. But it was tired, and he was tired.
Yeah.
He really is a creative, and he's an intellect, and he just loves to nerd out on technology and innovation. And so by my stepping in and really sort of assuming the business sort of responsibilities, it's freed him up to do more of what he loves.
Mm-hmm.
And so that happened in August, and I looked at kind of what we were doing and what the company was doing historically, and just felt like it was off. A lot of their strategy was very, very old in terms of how they communicated to their audience and their customers. And they had an advertising platform, and we're basically, sending emails to people with ads on them. And so I said, this needs to stop. But I was no digital marketing person. So
Right.
in the intervening time between when I hired a firm to recreate an up-to-date website,
Mm-hmm.
I needed to learn how to do digital marketing. So I
Right.
spent the better part of 6 months with countless podcasts and books, and books I'm sure you've read. And Don Miller's Story Brand is brilliant. And a lot of what we came up with was a result of just trying to understand, how do we once again drive value to those early stage innovators to get their story out. And so we've sort of recreated the platform, created, they've been long doing these featured stories that Robin will write about a company and give his take on it, interview people and give quotes. And it's really compelling. And then they've done these master classes, which is more like an infomercial than anything else. And so the missing piece was the podcast. So we created OTW Pod, and we've done maybe half a dozen or so. We've also added lots of new features. One of them is this the business of orthopedics, which we've added, which really addresses from both the physician side as well as the industry side, what are the challenges that we're facing and how do we help sort of navigate those? So we've got one on how do you become a KOL? If you're a physician and you aspire to that, how do you do that? And, do people come to you? Do you pursue it? How does it? So I interviewed Paul Slosar, who's a spine surgeon, retired. Now he's with FICAP Fund, which is a VC, and they invest in early stage Medtech. And he gave his story and kind of road mapped it. We've done one on value analysis because value analysis is the massive roadblock that, 20 years ago didn't exist. So this was kind of benefiting both industry and physicians because they're part of the solution to getting through value analysis to be able to have access to sell your products.
Are you talking about value analysis committee?
Yes.
Like the VAC committee?
Exactly.
Okay.
Yeah.
And people didn't understand how to navigate that?
I think there's a lot of misconceptions, a lot of misunderstanding. So we just try to bring some light to that, just shine a light on it. Then we've got we did one on how to work with independent distribution because I said earlier, orthopedics is mostly independent.
Yep.
And so there are best practices. So I had a guy who's been super successful in that to do a podcast on that, so those are the kind of things that we want to do to sort of add value, to help people. And we're going to do more things on physicians that want to create concierge practices and who want to, do different things that sort of give them opportunity to improve their business.
Yeah. Okay, so let's switch gears if you don't mind. So something that I think is universal to both of us, although yours is heavily in the orthopedic, although I just had a orthopedic client, one of my first. So
right on.
Starting to broaden my horizons.
Very good.
It is in robotic surgery, so it's not a huge stretch. But all that being said, something that you and I have in common. We work with a lot of executives. So our entire audience of clients are all executives within early stage medical device companies, independent of what specialty or what product they serve. And you also work directly in not only placing executives, but obviously you're working with boards and people that are making the decisions on the executives. And so I think it's a good conversation to have, especially from someone that's constantly placing executives, to just reflect for anyone listening. One, what are the, let's just call it top 3 to 5 traits of a successful CEO? And you can place it in the MSK lane, but I would think that it would translate to all industries within medical device or even outside of medical device. What are just the common traits that you find that are just the winners and that get retained, but also stay the long haul? I know this is kind of like a spitball round, but off the top of your head, what would you say makes the best the best? What does good look like in that?
Yeah. Well, I would say first, it really is highly dependent upon the stage of the company. Because if you're an early stage company, then I would say disproportionately, you have to have a real bent towards commercialization and understanding of some of the things that you were talking about earlier, some of the branding, some of the the preparation for launching a company, for launching a product, and I think what I often see is when I'm brought in, there's a technical founder, and they take the company so far, and now they're kind of ready for that next capital raise, and the technical founder lacks that experience and can't instill enough confidence in the investors to bet on them. And so you've heard it said that, the smart investors are investing more so in the jockey than they are the horse. And
That's a
so,
good analogy.
and so today, because none of the big companies have an appetite or capacity to innovate, all the innovation is coming out of these small companies, these startups. And you're not generally seeing a commercial leader start a company. You're seeing a technical leader start a company. And so their skills are, what you would expect them to be.
Technical.
Really technical,
Yeah.
really great on some degree of R&D, and they've mastered regulatory and quality, and they've really put the company in the right position for that next sort of iteration of a leader. And far too often those technical founders are just really reluctant to want to pass that baton. They just really want to see it through, and they're often the last ones to realize that they can't get it done. And
yeah. Can I interject just for a second?
yeah,
Because this comes up so many times where it needs to just be addressed. So I 100% agree with you. Big companies are bloated. They're not often innovating. They're acquiring other innovations, and they're not the ones putting new products or new solutions in the market. They're just moving their portfolio around, right? So it does rely heavily on these technical founders or even engineers and or physicians who have a great idea. And what I have found with Tribe Agency, and we kind of place ourselves right in that innovation web, is technical founders can get all of the nuts and bolts done, the product dev, the road mapping, the phase gating, all of the technical things, the regulatory, et cetera. But I would say largely there's a skill gap, which you just identified as the number one trait of an executive placement within these same companies. The skill gap is commercialization. It is branding and marketing. And I hear too many people say, I don't believe in marketing or I don't believe in branding. I'm like, then you don't believe in being a company. Because ultimately, how do you get the word out on your innovation if you don't brand it and you don't actually have a viable brand that has its own identity that people can relate and feel emotionally attached to, coupled with marketing is the channel in which you're pushing your brand out to your desired audience. So you have to have both of those to, one, enable your sales force to do their job, and two, to actually get revenue to exchange. And so all the technical product specs, like I have a client we just onboarded this week, both scientists, husband and wife, and both very technical. And so they've been in business for, I think, 7 years now. And they've gotten it to this far, but they've found that they're plateauing in this sales enablement commercialization piece. And so I just want to validate that when you are placing executives, let's say that the technical founder has run its course or they've burned the cash, right? Or both. You do need to bring in someone who understands, I think I wrote it down, the bent towards commercialization. And it seems so obvious to say out loud, but I think a lot of founders maybe don't have the ability to be introspective at times, and maybe they don't understand that they are getting in the way of scale. And so sometimes you brought to the table what you needed to bring to the table, and then it's handed off to someone who has moved multiple companies in and out of this equation multiple times. And they, it's just rinse, repeat, right?
Yeah.
So anyway,
Well,
sorry to interject, but
what you just said, I think, is one of the attributes that I would isolate, and that's the ability to delegate. Because, quite frankly, where I see a lot of these founders run into trouble is they are so controlling.
yeah.
Because that's how you succeed in the early days. You control it all.
Yeah.
You're on top of every minute detail. The problem is that at some point, when it comes to that marketing and sales, and start to talk about the commercial prep, getting ready to, where you're talking about supply chain and all the things that are really essential to a good launch, they cannot do it all. And so they have to be able to delegate. They have to be able to entrust someone else to do it right. And if they're overly controlling, they just stifle the company and it won't go anywhere.
Yep.
And that speaks to another component, which I think is capacity.
Mm-hmm.
The thing that I've been most impressed by the CEOs that really thrive are they just have like an extra gear or two where they can manage not running every division, but they can manage several different verticals within the company and do it through by extension through other people,
Mm-hmm.
but they're able to understand the nuances. They grasp all the challenges, and they understand and can triage problems when they come really quickly. um, but where you see a lot of people, I think, run into challenges is when whether they're an engineer or a salesperson, when the stress picks up, they tend to really hyper focus on what they're comfortable with.
Mm-hmm.
And it's those things that they're not comfortable with that tend to get ignored.
Mm-hmm.
And one of those is, and I've seen extensively, is that raising capital.
Mm-hmm.
They just don't like doing it. They're not comfortable there.
Yep.
It's a necessary part of the job, and they just have a hard time accepting that it might be 25% of their job
Mm-hmm.
to be that person that's just pounding the pavement, so to speak. Um, but that really does speak to, I think, not everybody is wired for that role,
Yeah.
and a lot of people really want it and pursue it, and oftentimes find themselves in it, and they struggle, and you see the fruit of that. And it's things like an unhealthy culture, a toxic culture,
Mm-hmm.
because of the stress level getting so high that they tend to act out on their people, um, in a variety of different ways. And so I think when you have sort of that cocktail of qualities, part of one of them is, really an exceptional communicator, being able to be concise and quick and to the point, so you don't have to over stress and spend too much time trying to get your team aligned and focused on the right goals. So I think that people's default comfort can just step in and override some of the other responsibilities that are essential to being a really capable CEO.
Yeah. Well said. So I just this prior episode I had the pleasure of having, I don't know if you've ever read the book Emotional Intelligence 2.0. He actually just came out with a new book called The New Emotional Intelligence. Travis Bradberry is the author. If you haven't read it, I'm sure you have. But that being said, going back to the technical founder, which I work with quite a bit, and I do think there's a runway there. And I do think if ultimately, this is to any technical founder listening, if ultimately your goal is to sell the company, then I guess you could continue, with your current process, which is typically very literal and not commercial. Everything's product heavy, spec heavy, very technical, and it doesn't really appeal to one, your audience, or two, investors. But if you're looking to appeal to strategics, you may be able to hide the gap there. But if you
Yeah.
have motivations of being a commercial entity, let's say you're a technical founder, you have an amazing product, and you're wondering how to get to a point of commercialization, and you're wondering the value of marketing and branding and even sales people. And oftentimes, like you said, they're very uncomfortable in the whole concept of sales or marketing or enablement or any kind of commercial conversation to be had, even with investors. That's when I think they lose perspective. And if the goal is to scale, then absolutely find someone with that skill set, because what I have found to be kind of a universal truth is oftentimes they do lack that soft skill, which is the people skill.
Mhm.
And if you're having to be at the helm, you can still be on the board, or you can still be the founding principal of that company.
Yeah,
But
CTO. Yeah,
yeah, but
sure.
I think ultimately from the people skill, salespeople want to be led, and they need motivation. They need that vision. They need the why behind what they're doing every day, so that the days that they get kicked in the teeth or told no, there's an overarching, resounding mission and vision that's hanging over them that they want to execute on. And so I have found with the technical founders, they have a hard time filling that CEO role from being what's the word? Not leader, but they have to be a visionary. So
Mhm.
it's not just about having a great product and it's just going to sell itself. That rarely happens, right? It's about leading with vision, leading with the why, leading with passion, pulling on emotional tugs and heartstrings. And that is the one major gap, aside from emotional intelligence, I've found that
Yeah.
sometimes is missing in this field of
Yeah.
people.
You're right. And I think, if the goal is an early exit and you're the technical founder, number one, you're leaving a lot of money on the
Yep.
table, because if you can drive that number
And some
to
traction.
show some growth and
Yep.
market adoption, which frankly, I don't think strategics are acquiring companies without some
Proof of
adoption.
concept. Yep.
So, I think it's just, again, the only guy there's very few CEOs that are founders that are really build
Mm-hmm.
an incredible company. One, of
Mm-hmm.
course, is Steve Jobs, right? You look at him and he's like that unicorn guy that was super, super smart and, was kind of was able to figure it out. He had some rocky road, along the way, but most of the time, we're not Steve Jobs. We're not that, Elon Musk type where we can, that guy has the capacity to run many companies that are innovating and doing things that blow my mind.
Mm-hmm.
But I mean, that's just not normal. And
Right.
anybody who thinks that they're, an Elon Musk or Steve Jobs type, needs to probably have a reality check. Um, but I think that you can run a company still if you're the technical founder, if you have an appreciation for what it's going to take in terms of um, capital to fund a commercial endeavor. And
Mm-hmm.
that's where I have seen a number of technical founders struggle to appreciate, why do I need $10 million to go commercial? You know, I've gotten to this point on 2 million.
Mm-hmm.
Why do I need 10? Look at the dilution I'm going to get. And so, if they can appreciate that, and it's part of their, maybe their lack of ability to really model out what the sales curve and what the revenue would look like and what the resulting, value of that enterprise will be
Yep.
based upon showing that kind of growth. So I think it's obviously there's a lot of factors that go into it, and each person, as I said earlier, is unique. And I think that it would be great if CEOs made an investment on getting a coach, getting an executive coach to help them think through and seeing where their blind spots are, because we've all got them.
Yep.
And, hire to your weakness. And that's kind of, I want to go back to Stryker. One of the things that Stryker's long held a view of is playing people to their strengths.
Mm-hmm.
And if someone's really good in one area and not in the other, maybe take that other area off their plate and let them thrive in what they're really, really good
In
at.
their zone of genius.
Yeah.
Yes.
And so I think you can do that as a CEO. You can hire a really strong commercial leader and
Mm-hmm.
still be the CEO. Um, but you have to also resource it properly.
Yep.
You can't expect an incoming commercial leader to operate on a shoestring budget, because that's how you've done it.
When should someone, if they're listening right now, they're a technical founder, they don't have an active C-suite. Let's say they're kind of acting as all hats right now. When should they reflect on this? I'm over my skis, and they'll never actually come to that term. But let's just say they're at a point where they're like, I've taken it as far as I can take it. It's now got the inverse effect of happiness on me, right? It's now become a
Yeah.
burden. I'm burning cash. I don't have a strategic plan in place. We may close our doors. So, when is the time where they need to look at bringing on executives that have, let's say, a bend towards commercialization or whatever their bottleneck is? When
Yeah.
is that?
I would say before you have less than 6 months cash,
Okay.
um, everybody's got a burn rate, and so they have a runway. And if your runway is approaching, I'd say really probably at 9 months is when you really need to start doing some self, evaluation. Where are your gaps, and what does your outlook look like in terms of your commercial plan? Do you have a tried and tested commercial plan? Have you had, you can have a consultant create a commercial plan, and then put some some actual numbers to what it's going to cost to execute. And can you raise the amount of money that you need before you hit that wall? Because I will say, if you get, the closer you get to that endpoint, the more costly and the more onerous the cost of financing is, whether it's debt or equity. You and it's sort of cliche, sadly, how many times you'll start a process with an investor who's doing due diligence on you, and they know they've got access to your data room. They know exactly how much money you have, and they know exactly what your runway is, and they just slow play it until they know they've got you over a barrel. And whatever the terms are that they want to set, whatever terms they want to set, you got, you have no,
don't have a leverage.
You have no other options.
Yeah.
And I've seen a number of companies, once they start to fall in love with that company they think is going to be the one to fund them, is they kind of quit talking to the other ones thinking this is the done deal. And now, to your point, the word leverage is gone.
Yep.
So this is where you really need to have, hopefully you have some good advisors, some good board members that aren't just your friends that tell you what you want to hear, but will actually challenge you and bring a different perspective, not just an agreement. It's like another pitfall that I've seen is these founders will have their friends on the board or family members who, frankly, don't want to upset them.
Right.
Don't know the right questions to ask.
Yeah. They're going to be the yes people.
They're really not helping.
No.
They're actually hurting you.
Yeah. So
independent board members are really essential to de-risking the enterprise.
Wow. So much we've talked about is just real world. It's not make believe. It's not, I interact, and I know you do too, with everything we've just talked through on a daily basis. And sometimes it's disheartening to see, if someone would just get out of their own way, they would get what they want. And there are other people that are more qualified in whatever lane it is to get them to that next level. But it's like they're white knuckling it because they started it and they want to see it through. And it's hard to watch sometimes, but I think if you take that leap and you hire really good people, which always comes back to the principle of hiring, just hiring tough and managing easy, you're going to win in the end if you get out of your own way and identify your strengths and how you brought the company about. And then also acknowledge that there are other people with equal levels of strength in different areas that could then get you to that next generation of your company. So hopefully we've inspired some introspection and introspective thought. And so I normally ask the 3 questions, but I've already asked you the 3 questions in
don't ask me again.
The past. I won't. But I do want to say thank you. And I hopefully, one, we've cleared up a few things, what MSK is versus what OTW is versus what DeAngelis Search is, not to be confused with OrthoSpine Search. I'm literally going to hang up and go search on the domain for DeAngelis Search.
DeAngelis Group.
DeAngelis Group. Okay.
Yes. And I do own that domain. It's just too long and I have to spell it. And I can say OrthoSpine Search and people spell it right.
Yeah.
When I say the DeAngelis Group, I'm having to go down the route of D as in David.
That's true. Yeah.
G as in George.
That's true. Yeah. Hey, and it's working for you at this point. So why fix what's not broken, right?
Right. There's plenty of other things to fix.
There's plenty of things to fix. Well, Drue, thank you so much for your time. I always appreciate the conversation. Like I said in the very beginning, Drue is one of a kind. If you go to LSI, he's always there. And go introduce yourself and shake hands with him, find out what he can bring to the table for your company. And also just a ton of wisdom on many, 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 many things. He's been a great mentor to me throughout my entire career, and I appreciate all the wisdom I've gotten, including today. So, Drue, thank you. Have a great rest of your week, and until next time. Thank you for tuning in to this episode of Leader Podcast. If you enjoyed our conversation, please take a moment to subscribe, share, and leave a comment so more listeners can find us. Interested in sharing your own story on Leader Podcast or looking to elevate your brand and marketing efforts with Tribe Agency? Visit us at tribeagency.org/contact to get in touch. We value your engagement and look forward to growing with you. Don't forget to follow Leader Podcast for more inspiring episodes like this. Thanks again, and see you next time.